back to Global Value. In today's video, we are taking a look at SoFi Technologies Inc., ticker symbol SOFI. We will be performing a fundamental stock analysis of SoFi. Through that analysis, we're going to come to a starting point based solely on the financials of the company. So currently at the time of recording, SoFi is trading for $6.55 per share. They've had a rough stretch recently. They're down 60% over the past year. And since they merged with one of Chamath's SPACs in 2020, SoFi has been down 37.5%. So we can see that SoFi is just above its 52-week low right now. And it's about a $6 billion market cap company, $5.8 billion. So SoFi, which is short for social finance, is a digital financial services company that was founded in 2011 and is currently based in San Francisco. It operates through three segments: lending, technology platform, and financial services. Initially, it was known for its student loan refinancing business. However, the company has expanded its product offerings to include personal loans, credit cards, mortgages, investment accounts, banking services, and financial planning. SoFi originally utilized an alumni-funded lending model that connected students and recent grads with alumni and institutional investors via school-specific student loans. Investors received a financial return and borrowers received lower rates than the federal government offered. The company sought to minimize defaults by focusing on low-risk students and graduates. However, as SoFi's product offerings expanded to include mortgages, mortgage refinancing, and personal loans, the company moved away from its alumni funding model to a non-traditional underwriting approach focused on lending to fiscally responsible individuals. With that being said, the company intends to be a one-stop shop for its client finances and operates solely through its mobile app and website. Through its acquisition of Galileo in 2020, the company also offers services to financial and non-financial institutions. SoFi also operates Apex, a technology-enabled platform that provides investment custody and clearing brokerage services, as well as TechniSense, a cloud-based digital multi-core product bank platform. SoFi was founded in 2011 and is headquartered in San Francisco. Fun fact, SoFi acquired the 20-year naming rights to SoFi Stadium in Inglewood, California, home of both the Los Angeles Rams and the Los Angeles Chargers. So before we take a look at the financials of SoFi, let's remind ourselves of the 4 principles of value investing. Principle number 1, when you purchase a stock, what you're really buying is an ownership percentage in that stock's underlying business. Over long periods of time, a stock will return approximately what its underlying business returns. Value investing principle number 2. Mr. Market is there to serve you, not to inform you. Price is what you pay and value is what you get. Value investing principle number 3. Margin of safety. In order to achieve superior risk-adjusted returns, every investment requires a sufficient margin of safety. And value investing principle number 4. Circle of competence. As an investor, you don't deserve to earn money from something if you can't understand it. You might not have to understand a company in the way that a technical engineer would, but you would better have some sort of insight into the essence of the business, how they make money, and what that business's earning potential looks like for the future. With that being said, let's dive right into our analysis of SoFi. We'll be performing an 8-pillar analysis popularized by Everything Money, checking out 8 different financial metrics to see how SoFi compares to them. So pillar number 1, we're looking for SoFi's average 5-year PE to be below 22.5. So SoFi has only been a publicly traded company since November of 2020. However, even over this period of time, they've got a negative PE, so that one's going to be an X. Next, because this is a financial company, we're looking at their average 5-year return on assets. Again, SoFi doesn't have data going back 5 years. So for the past 3 years, they've had a negative return on assets. So we wanted this number to be above 9%. However, it's negative, so this is going to be our second X. Pillar number 3, we're looking for 5-year revenue growth. So in 2017, SoFi did just over $500 million of revenue, and they grew that to just under $1 billion of revenue in 2021. So that is going to be our first check. Scrolling down, pillar number 4, we're looking for 5-year net income growth. In 2017, SoFi had $50 million of net income. However, that decreased. SoFi lost almost $500 million last year. So that is going to be another X. Pillar number 5, we're taking a look at shares outstanding. We don't want a company to be issuing new shares. And here, this is going to be a problem. In 2017, SoFi had 37 million shares outstanding. That grew to a walloping 527 million shares outstanding. What this means is that for every share an insider investor would have owned in 2017, they're entitled to only 7% of the company's earnings now. So that is a very bad X. They're significantly diluting shareholders. To understand this better, definitely dive into their 10K and look for why this happened. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. Free cash flow can be used to pay dividends, buy back shares, pay down debt, make acquisitions, and reinvest back in the business. So in 2017, SoFi had negative $3 billion of free cash flow. Now, as of 2021, they only had a negative free cash flow of $1.4 billion. Technically, they did grow free cash flow. In an average year over the past 5 years, they've lost about $800 million. That number is going to be important, especially for pillar number 7 coming up here. So pillar number 7, we're comparing SoFi's net debt to their 5-year average free cash flow multiplied by 5. So net debt is long and short-term debt minus cash and cash equivalents. So this means that subtracting all their cash and cash equivalents, SoFi still has $3.7 billion of debt. And because they average negative free cash flow in an average year, this is going to be another X. Finally, pillar number 8, we're looking at SoFi's market cap, which is about $6 billion, and comparing that to their average 5-year free cash flow multiplied by 20. So again, they had negative 5-year free cash flow, so this pillar is also going to be an X. So in summary, guys, SoFi checks the box on 2 out of 8 pillars. They had X's on the majority of pillars, and some of these were pretty bad. They're not producing free cash flow, and they're diluting shareholders like crazy. The only positive I see from these fundamentals is that their revenue growth has almost doubled. The question you want to ask as an investor is that growth sustainable? And does this company actually have enough runway that they can get to the point where they're making money and not losing money hand over fist for investors? So the revenue growth is what's positive out of these 8 pillars. Again, if you're considering investing, you have to understand, is that revenue growth durable? Well, guys, that's it for today's stock analysis of SoFi Technologies, ticker symbol SOFI. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Have a great day, and thanks for watching to the end.